I'm Greg Hunter. Welcome to USAWatchdog.com. With us a brand new guest. He's an expert in tech. He has he's an expert in entrepreneurial tech companies and startup companies. He started 10 of them. He also looks into the future as an expert on tech. He wrote this years ago in 2012, the Crowdfunding Revolution. This is the first edition. There's a second edition out too. This book helped get crowdfunding legalized in America. It had Senate hearings on it, and people were quoting things from his book. He's done two recent startup companies. He's also done a piece, and this is why I'm bringing him on, Beyond the Bitcoin Trap, a cryptocurrency for human 2.0. His name is Kevin Lawton. He joins us from Tech Rich, Austin, Texas. Kevin, thanks for joining us today on USAWatchdog.com.
My pleasure, Greg. Big fan. Glad to be on.
Well, thanks for coming on. I really appreciate it. I mean, you have done all this entrepreneurial work in tech startups. You've started 10 tech companies. I mean, it's outrageous. And then also you like to, what you say is give people next year's trends reported today, which I think is very important. I mean, your Bitcoin, we've had a long conversation off camera about this. I wanted to bring this on. Also, too, just a quick disclaimer. We're having some kind of Skype issue. We've tried to fix it. It's a little a sync problem or buffering problem. But you're not going to really worry about it because what Kevin's about to tell you is going to be really pretty important, especially for all you folks out there that are looking into and buying and investing in cryptocurrencies. So that said, so Kevin, you wrote this piece called the Beyond the Bitcoin Trap, a cryptocurrency for human 2.0, and in our pre-interview, you talked about a Bitcoin civil war. It's going to have a fork in the road. That things like Bitcoin and I think Ethereum are going to split, and there's going to be some big winners and some big losers. Can you please talk about the Bitcoin civil war?
Yeah, in Bitcoin, what's happened is there's a huge scalability issues that it has in terms of transaction speed, and it's been ongoing for years now. So there's sort of an idea set from the developers on how to fix this, and then there's a set of ideas from the ecosystem players like the miners and the payment transactors on how to go about fixing this. And the issue here is that with the developers, they're obviously the ones that are writing the code that runs the core of Bitcoin, and they're rightfully so a little bit conservative about how they approach going forward. But there's sort of like two camps, and they've really split off, and really not much has gone on. And so to force the issue, what's happened is the developers have decided, well, we're gonna create this mechanism that will force the issue. And just for those people at home, I'll swing out some terms. BIP 148, BIP 148. That's a proposal to kind of force the issue, and that is getting a lot of support from the users, and that'll probably go as of August 1st. But then on the other side, the big money people in the space, payment processors, miners, and all that kind of thing, they have their own proposal. They want to do more than what the developers want to do. And so they've created this proposal that will have some of the developer stuff in it, and then it'll increase the block size so they can put more transactions per block in there. And their proposal will launch about the same time frame. So remember August 1st plus or minus a day, because that time frame is when things are probably going to get pretty turbulent. It could be just a blip and everybody plays together and we go forward with Bitcoin, but there could be some splits like we saw with Ethereum, where now there's Ether Classic and in the current Ether. We could see that in Bitcoin easily. So
and some people may liquidate. And some people may say, oh my gosh, I don't know which one of these is going to win. When it splits, you got to pick a winner and a loser, which it's like beta and VHS. Beta was a much better format for videotape, but VHS won. So, if you invested in beta, you lost, unless you were a TV station, right? So you're saying that people might start liquidations even before the August 1st when these things roll out. Is that right? Talk about that.
Yeah, it's possible. So here's the set of issues. When the split happens, you effectively have the blockchain go down in two different directions. So you can think about your crypto coins existing on both paths at the same time. can create a lot of havoc. If it happens in a short time frame and then there's a big winner and everyone gets behind it, the blockchain reorganizes itself and goes down the main path. And so you're fine. But if it doesn't happen in a short amount of time, some really bad things can happen. You can get double spend issues with your coins. You can have this thing called reorganization, which can disappear your transactions. And so, well, my anticipation is that some people who have big money at play are probably going to want to liquidate their Bitcoin positions ahead of potential fork nightmares, and then rematerialize your Bitcoins later, or maybe even get into other alternative currencies. So there is that possibility of liquidations.
And it could cause the price if everybody starts liquidating at the same time. I mean, I had Warren Pollock on. He was talking about the speed of it was, 7 transactions per second. And, the old check writing system that's still out today is 400 per second, and Visa does 50,000 per second. So that's what they're trying to fix, the speed of the transaction, so they can compete, with Visa. But you're saying, go ahead.
The interesting thing with that is that so Bitcoin it's pretty much maxing out at 7 transactions per second. It's probably 3 to 7, and in all these doings with this potential blockchain fork, they might perhaps, like the software developers plan, will double the transaction speed, and the others will maybe let's say quadruple it. So it really isn't that material in terms of transaction rate. So there's a huge. What it really shows you is that Bitcoin, ostensibly being decentralized, one shortcoming is that there's no organizing principle that drives. There's no group of people that can, for example, decide, okay, what's going to happen, which path are we going to take, how are we going to make changes, and so you have an ecosystem that splits off and is sort of at odds with each other. There's no kind of unifying principle that gets everyone behind making changes in a very consistent basis, and creating a real consensus. So the transaction rate's really not going to go up that much, not enough, because there's always a big pile of transactions that want to go through the Bitcoin network. In fact, more people would probably use it if it was more feasible. So doubling or quadrupling, this is not going to help Bitcoin. In fact, actually, people might be interested in knowing that if you look at what is Bitcoin, it's really this aggregation of all these nodes across the world burning maybe 600 to 800 megawatts of power. By 2020, I think it's going to be in the thousands of megawatts, all to create a few transactions per second. Meanwhile, Visa's cranking through. I think they state they can do 24,000 a second. They're probably sandbagging. It's probably more like 50,000. And then, just to give a little bit of comparison there, someone did a napkin estimate, back in a napkin estimate of Facebook, like how many user requests they take, and I think they figure they probably handle about 350,000 user requests per second. At the API level, way more than that. So it gives you an idea how slow Bitcoin really is.
And if people start liquidating and they front run this trade, they could lock the system up, right? I mean, if everybody says, "Oh my gosh, I don't know which path this is going to take, and I don't want to be stuck with a much slower coin or a bad coin or getting caught in a crossfire between two platforms," they could try to sell and either A, drop the price down, or B, or both, lock the system up. Could they do that?
Yeah, they can materially affect the price. So far, we haven't seen anyone jam up the exchanges anyway with Bitcoin. We've seen it in Ethereum. I mean, this year is going to be the year of volatility for Bitcoin price. There's all these different there's a calendar of events in some ways, you could say. The selling, this is just my anticipation that people are going to liquidate Bitcoin beforehand. Of course, you've seen the Ethereum crash, flash crash, to get an idea what can happen when a lot of people put sell orders, or one person in that case putting giant sell orders into what the effect is on the exchange. But there's more than just before the fork. The fork, by the way, isn't one day. The fork is really it starts in like August 1st, and then it really doesn't lock in until mid-August. And then if the big money players get their way, then there's another hard fork that's going to ensue probably around November 1st, and that will increase the block size so that there's more transactions per block. So there's like an ongoing calendar of things that could happen. And then you have also like, the tax calendar. People might liquidate because people are trading coins, and so they might have to pay their quarterly tax. And then there's all kinds of things thereafter that could create volatility. Like, for example, when people fund these new initial coin offerings that you're seeing pop up, they fund them in Ethereum or Bitcoin, and then the company, they take in large amounts of these coins, and then they have to pay their bills, they have to pay their accountants, lawyers, real estate, whatever. So what do you think they do? They liquidate some of the coins, right? And they pay their bills. So there's constant like run-ups and run-downs from the initial coin offerings, and then the liquidations after. And then next year, like a year out from when the initial coin offering started, you're going to have some employees that are getting unlocked from, like, for example, if they have 1 year lock-in period, they might be liquidating coins too. So there's like the entire calendar you have to pay attention to if you want to look at the price volatility or potential of Bitcoin and Ether, and Bitcoin in specific before the fork for sure.
And if you're a bet man, you would say that you'd be betting on some pretty big liquidations just in the next year for a variety of reasons. Would that be correct? Would you explain that? Just encapsulate that for it. Liquidations going to be the year of liquidations in the next year?
It'll be the year of volatility. So I expect liquidations before the fork, but it's like a tug of war. There's a lot of reasons for people to tug the price up. For example, there's a lot of pickup in, like, Japan legitimized Bitcoin. You have a lot of people who are even governments that are looking into cryptocurrencies. So obviously, there's a big trend for people getting involved in probably legalizing it, legitimizing it as a currency in India. India is legitimizing Bitcoin. So there's a lot of latent reasons to tug the price up. And then there's a lot of volatility issues, like, for example, liquidating before forks, or if the forks go wrong, it'll be bad. I mean, like everybody else, I'm hoping it's just a blip.
And that'll drive the price. That'll be a reason to drive the volatility is really what you're talking about, driving the price down. People liquidating for that reason, correct?
Yeah, the liquidation side will tug it down. Then obviously other things like countries legitimizing Bitcoin can materially change the price higher. Now, if we go back in the last few years, you can kind of look at China to find out what happens when there are downside events. For example, maybe I can remember 2 different cycles where in China the citizens, they're buying into Bitcoin just like they're buying into pretty much everything else. I mean, look at Vancouver real estate markets, white hot, just trying to put their money somewhere else. So to the extent that they put their money in Bitcoin and get on these exchanges that weren't, sort of gray market or weren't regulated according to how Chinese government wanted, that ran the price up significantly. And then the Chinese government would step in and clean up some of the exchanges, and then you'd see like massive downside volatility. So every time there's a sort of regulatory step in, then it's a downside, or a fork in this case. When people legitimize Bitcoin, prices could go up. So you've got this tug of war going on. I guess my big message is volatility, and then just kind of knowing what's going to go on so you can protect yourself, or at least know what's possibly coming. For example, with a fork, it won't be just people liquidating, but people who retain their Bitcoins. You need to know how to retain your Bitcoins. What you don't want to do, by the way, I only give ideas, not advice, but you really don't want to have your Bitcoin stored online on a service that retains your private key. That, just for technical reasons, that's going to be a big no-no going into this fork.
You need your own wallet.
Yeah, either you have your own full node wallet and you really need to retain your own private keys, or maybe you liquidate, or you could trade into another crypto during the interim. Would be, and by the way, your wallet, make sure that you have an updated wallet that supports BIP 148. BIP 148. Make sure people do that if you're going to have one.
Okay.
And if you don't, there, and by the way, if it's all possible, people during the fork, if you don't need to be trading, don't, because that's the time where a lot of weird cases can happen, and you can double spend, or your transactions could disappear. If this is only if bad things happen. And by the way, also if you're going to use like an exchange, you're just going to trust your money on exchange or whatever, make sure they're supporting BIP 148. And also, don't be surprised if before the fork starts, if you look in your exchange account and you see three different forms of Bitcoin. The first is like a primary Bitcoin, and then two other weird alternate Bitcoins with a zero balance. Don't freak out. That means that your exchange is actually looking out for you and understands the cases in front of them.
Oh boy, this is fascinating. I got to tell you, people are going to love this. I mean, we're getting into deep dive in the tech world, and we're going to continue the theme of the year of volatility. And one of the other things that will add volatility, here's a headline from a couple of weeks ago. ECB says Bitcoin is a threat to central banks. Also, there's a bill Senator Grassley hasn't passed yet, but they want to really take a hard look and regulate Bitcoin because they're afraid of money laundering and they're afraid of it funding
Right.
terrorism, things like that. So tell me about the regulation side from governments. Let's start in America. I mean, we have this bill.
Sure.
If it goes through, Bitcoin's going to get regulated, and again, it'll be there'll be sellers, there'll be buyers. I mean, there's a big volatility coming. There might be a lot of sellers if it gets regulated. Correct?
Yeah, my anticipation is in the fall after Congress gets back from their recess. That's probably when they're going to be looking to pull out the daggers for Bitcoin and cryptos. I mean, you've already seen like in May there was a lot of talk from Congress. There's a couple different bills put forth to, for example, look into potentials that cryptocurrencies are used for financing terrorism and all these kind of and money laundering. So you'll probably see the regulatory complex come forward and dive into anti-money laundering, which is called AML, know your customer, KYC, and how to interpose that into the whole Bitcoin and cryptocurrency ecosystem. And then obviously the study that was given by Congress, I don't know if this became financed and officialized, but the idea was to give the Department of Homeland Security 6 months to study potential for cryptocurrencies financing terrorism. So that 6 months would be up in November. So it gives you a time frame, kind of when the daggers might come out. So that's America, but and people have asked Federal Reserve, some of the people from the Fed, what their stance is on cryptocurrencies. And so there's I think it was a guy he was a senior VP from Federal Reserve Bank of Boston. And what his response was kind of points to the fork that happened when the DAO had issues with it was running on Ethereum network. He said, well, imagine if 51% of my members decided that, we were going to just roll back transactions, no one would stand for that. So he's talking about this idea that, once, if they do a wire transfer, they do a wire transfer. No one backs it out, right? So there needs to be permanence in it. And he kind of pointed to that situation with the DAO and Ethereum to sort of poke fun out of it. But as we take a tour around the world to see what efforts are going on from central banks and big money players, even the big banks, you're going to see that whatever stance the Fed has on it now, likely they'll be slower than everybody else. But these trends have a way of forcing people's hands, forcing people to get in and adopt the technology, whether they want to or not. So that's kind of my quick tour of the U.S.
And it just adds to the volatility. Regulation will add to scare some people off. Other people will embrace it. The speed issue with Bitcoin and Ethereum is a big deal. I mean, when you're looking at that it can't even keep up with the old check writing system, they're going to fix that. How do they fix that? I mean, you're talking about maybe making it twice or 3 or 4 times as fast. I mean, that's not going to really do much if you're competing just with the old timey check writing system, right? I mean, you need to get maybe thousands of transactions a second, not 7 or 8 or 10 or 15 or 20 transactions a second, right?
Yeah, it reminds me of that saying that the Stone Age didn't end because we ran out of stones. I think Bitcoin's problem is that there's no organizing principles behind, making decisions. So probably what will happen is if they can't really rally around this and fix Bitcoin for real, is the business is just it's going to go elsewhere, and also it will move up to other layers. So to be honest with you, most of what people probably think about it in terms of Bitcoin transactions don't actually happen on Bitcoin, on the proper Bitcoin blockchain. They happen off chain in other like payment processors that could act as a clearinghouse to do aggregate a lot of transactions and then only transact sort of opening and closed transactions to the blockchain. For example, if you go in a bar, right, you open a tab with your credit card and you do a whole bunch of transactions with the bar, and at the end of the night you close. So in a way, that open and that closed transaction would go to the Bitcoin blockchain, but everything you did in the middle is cleared, aggregated by the bar itself. That's
In
actually
other
what's
words, you
going
just
on.
ran up your Bitcoin tab. You would just run up a
Yeah,
Bitcoin tab to be
yeah. There
settled
are
later.
there are layers that are acting as sort of aggregators and clearinghouses, and most of the traffic is actually going through them. I mean, even shopkeepers, whatever they might have, we accept Bitcoins badge on their website. The truth is, almost no one accepts Bitcoins. What they do is they use a payment processor like BitPay. BitPay takes your coins. They do whatever they need to do, making or clearing transactions. But really, they just trade the Bitcoins on a market and then provide cash to the shopkeeper. So the whole idea of Bitcoin, it's really a bit of a farce, I have to admit, in the sense that there's this whole ecosystem wrapped around this archaic inner core of the blockchain that Bitcoin has, and it's sort of pretending like it's all Bitcoin, but really the Bitcoin, there's really not much uh, utility in Bitcoin as used as a currency at the moment, because of the transaction speed and because the price volatility and the price is steep, et cetera. So it's sort of bizarre in a way, right? You find out that when you really look into this, that there's this sort of Bitcoin thing in the middle or in the bottom of it, and you could almost sort of remove it for most people's purposes, and it almost wouldn't matter. You can accept, seashells or something like that, and as long as they can be traded on the exchange and provide cash to the shopkeepers, they wouldn't care.
They're basically providing credit. I mean, basically what they're doing is saying, okay, we got this Bitcoin, but we'll go ahead and provide you the credit, and then we'll worry about getting the Bitcoin, taken and processed through the slow processing later. I'm a layman, so is that a
Yeah,
simplified version of what you're talking about? They're
it's
basically
something.
providing credit.
Um, I don't want to characterize it as credit because it's not a borrow of something. It's just that somebody else is dealing in Bitcoins and giving you the cash equivalent, or the cash equivalent could be looked at as what's traded on the exchanges. So they're essentially a middleman that deals in Bitcoin, so that you don't have to. Because I mean, what's a shopkeeper going to do with a Bitcoin? You get one, it might take an hour to clear. It might take, if things are clogged up, I've seen transactions that pended over one day on the Bitcoin network. So, you can't really take a Bitcoin as a shopkeeper. And then when you want to liquidate it so you can pay for the services and pay your staff, it could take another hour or another day to spend it. So, yeah, it's just someone's being an intermediary and dealing in the coins for you.
I got it. I say so. And finally, could we be on our way to I mean, could Bitcoin just be the MySpace of social media, and we're on our way to a Facebook that's going to take over? I mean, I mean, cryptocurrencies are here to stay, but not necessarily Bitcoin. Bitcoin could turn morph into something else, or all kinds of overlays could add. There's got to be something to increase the speed, because what you're describing
Right.
is like, I want to say I want to get out my horse and buggy with my smartphone and say, come on, let's go home now. I mean, it's that Bitcoin is well advanced, and the speed of it is like a horse and buggy era.
Yeah, all the things you mentioned are all possibilities. The overlays would be like the off-chain processing, extending the speed might be side chains as well. There's a way to sort of tether the Bitcoin blockchain onto other services and whatnot. That's kind of a deep talk on its own. But these overlays could happen. And at the same time, my feeling actually is that what's going to be a winner in the end isn't going to be Bitcoin. It's going to be another infrastructure. In fact, today, like if you look at the Ethereum network, that's, in my opinion, a lot more powerful. It's also more complicated, so then you have bug, possibilities. But Ethereum is overwhelming Bitcoin in terms of its capabilities. It's not that much faster, though. By the way, it's about twice as fast as Bitcoin, but the altcoins that are made on top of Ethereum, which we can talk about if you want, they're about the same speed as Bitcoin because you lose some speed because they're smart contracts. But I think that new technologies are coming out that are going to have better consensus models, the way that they look at all the thousands of nodes out there and figure out, what transaction went through and what didn't. It's kind of called a consensus model. They'll have faster consensus models and better architectures. And at the same time, Bitcoin, the core of Bitcoin, if you don't count all the overlay stuff, Bitcoin is really just a distributed ledger that keeps track of Bitcoins. That's it. There's no smart contracts. There's not like end-to-end encryption and all kinds of goodies that have come along subsequently after Bitcoin and even after Ethereum. So it's we have to be honest that Bitcoin probably did more than anyone could have hoped for in terms of proving out, technology and seeing what the potentials are. But the speed is it's just the speed, the lack of features. People keep trying to do overlays, but probably what will happen is new technology comes along and then kind of wipes that out. We can look at Ethereum for a moment. So if we've talked about the U.S., let's go over to Russia. They, in January, a group of financial technology people, payment processors, and some other people in the ecosystem, under the supervision of their central bank, forked Ethereum in January. And they're upgrading it with, Russian-grade encryption, which apparently means a lot better than the encryption that's already in it. And they're doing some pilot studies with the Ethereum modified blockchain and network. And so they're really taking this thing and running with it. And then at the end of that, they'll see, okay, which technologies, which direction we want to go, with the idea that in the future, they'll have the central bank and between the banks and the people all interact in some cluster, probably, private interactions between the banks and the central banks, and then public for the people. But so they're looking into a technology. They did not pick Bitcoin, was really my point. And then if we come back to the U.S. and they
did not. Your point is they did not pick Bitcoin. They basically did an Ethereum model, and that's what you're saying. You're saying watch out because Bitcoin may get basically might become antiquated. May become a platform that they can't ramp up and use. Is that what you're saying?
Yeah, there's this phrase called the flippening, which is when Ethereum market cap passes Bitcoin market cap, and that's not far behind. If there's a big push up in Ethereum or a big downspout in Bitcoin, that could happen in days. So it's pretty obvious that. So for example, Ethereum, just so people understand, it's sort of a superset in the sense that it has its own native alternate coins like Bitcoin does, called Ether, but it has smart contracts, and this is brilliant, man. It has the ability to run arbitrary little pieces of software all by the miners, and these pieces of software called smart contracts can interact with each other. So it's not just a tally sheet, which is sort of like what Bitcoin is, but you can actually run programs, and those programs can then be another form of coin. That's why we're seeing a lot of these initial coin offerings come out on top of Ethereum network, because the smart contracts, if they use the right API, which is a standard and everyone is using, they can essentially contain an alternate coin as a smart contract, and those coins are also storable on your wallet. If your wallet's compatible and you use the right spec, They can create a new coin and it goes right on your wallet without your wallet being updated. It's pretty brilliant. And later we'll talk about where smart contracts are going and how blockchain smart contracts and cryptocurrencies are going to change a lot more than what people are thinking about.
And to wrap this up, you would just say the fork in the road, the very first fork, is around August 1st. And then there's going to be other forks and other liquidations and other employees unlocking their coins that they made, that they had a year lockout. And there's going to be a lot. This is from now until the 2018, the next year or so. You say it's a year of volatility. And what would you tell people? What's the one takeaway you should tell people to take away from all this?
Well, so there's a couple of them. If you really don't know what you're doing, if you're not really following this technology, then you're first of all, don't transact during the fork window. The other thing is make sure that you know where your Bitcoins are stored and make sure that you have the private key. Don't store your Bitcoin somewhere with a service that's storing your private key. And people may want to. I certainly don't want to create an excess of people liquidating your bitcoins, but you might want to think about picking up a different, cryptocurrency in the interim. And obviously at the end of the year, there's tax liquidations and stuff like that. But also there is a lot of upside still left in it when big events happen. And in fact, the fact that I even said that tells you that it's not operating as a currency right now. I mean, you can't have. If it was a real currency, you would be able to store, it and use it, and then not think about it. Next week, you'd use it. But when the price has a big amount of volatility, like it does, even without the transaction speed issues, it's still not very usable as a currency. So you're a renter. You're not an owner of cryptocurrencies. At this moment in history, cryptocurrencies are really not currencies. They're a speculative bet. There are a lot of reasons for things to go up big, but there are reasons that you could get completely monkey hammered.
Monkey hammered. I love it. Okay, I want to plug this. This is Beyond the Bitcoin Trap. I just printed it out here. Maybe people can read it. I'll just read it to you. Beyond the Bitcoin Trap, a cryptocurrency for human 2.0. It's published on Kindle, and you can find it on Amazon. Is that right? Beyond the Bitcoin Trap, a cryptocurrency for human 2.0. Is that correct?
Yeah, that's correct.
You send me the link for that, and I'll make sure I put it in after the interview. And for you guys watching this on YouTube, go up to the right through, and then say all links are found on USA Watchdog. Go back, look to after the interview, and you can buy this Kindle, Beyond the Bitcoin Trap, a cryptocurrency for human 2.0. Kevin Lawton, fascinating. I heard stuff that nobody's going to hear. These forks are incredible that you're talking about. The first one is in basically the 1st of August. When's the second fork, the warning time?
If the miners get their way, it would be November 1st. There'll be a hard fork, not a soft fork.
So a soft fork in August and a hard fork in November for Bitcoin, correct?
Possibly, yeah.
Okay.
That's when things go right.
And for regulation for Congress, wait until after they get back in the fall before the daggers come out. I love it. And just be careful. Okay, Kevin Lawton, thank you for joining us today on USAWatchdog.com. Really appreciate it. Thanks so much.
Yeah, my pleasure, Greg. Hope to be back.